Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. If this is your first time joining us, welcome. For those of you that are live streaming on YouTube, welcome to you as well. I'll give you a quick rundown on how TradeFinder works. We're excited to have you. We got a really good session in store for you tonight. Before we get started, if you've seen any of the videos that we've done, you know this is a requirement. We have to go through this disclosure/disclaimer. It is important. So if you're seeing this for the first time, please take a screenshot of it, read it in detail at your leisure. A couple of things that the powers that be want us to make you aware of is number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So with that, let's move forward with how TradeFinder works. First thing that we're going to do is go through and talk a little bit about the market's interesting day today. Yesterday was pretty interesting too. Kind of a buy the dip thing yesterday and didn't quite make it all the way back today. So what does that mean? What's the volume look like? We'll go through those things. We'll take a look at previous trade alerts, anything that we may have closed this week for our subscribers. Got a couple interesting things to show you there as well. Then we'll go through and do a review of our case study considerations that we've identified in past trade finders. And then with whatever time's left after looking for a case study consideration for tonight as well, we'll open it up to general Q&A, which usually amounts to you guys asking us for your favorite symbols or giving us your favorite symbols. And we take a look at what our indicators may show. We do have support on, so if you have any administrative type questions, they're here to answer those. So that's how TradeFinder works. So again, welcome. A couple of housekeeping things that I wanted to go through real quick. We're excited. In September, we're starting every Wednesday of September, we're starting on Indicator Mastery. And this is a great course. I've talked about it in the past, the indicators that we utilize. And now we're going to do a week on each of the indicators that we focus on at Elliott Wave Options. What comprises our confirming indicators in addition to Elliott Wave? And it's designed to give you really a deep dive into each of the indicators, not just a general paragraph, Investopedia type thing that you can get on the internet, but not only a deep dive into the indicator, but a trader's approach, how we use them in actual real life trading. So we'd love to have you. What's included is you can see all of the indicators that we're talking about. We'll go through and talk about the DMI, the CCI, misnomer on the CCI. It isn't just for commodities. They found out, oh, this works really well on equities too. It's a great short-term indicators. For those of you that like to trade on a shorter-term basis, you get a good rundown on how to utilize that. Money flow, really important to support moves. The moving averages, which, plain old technical analysis there, but a little bit of a twist on a couple of things that we utilize those. And then, of course, the Elliott Wave impulse pattern. And I'm going to show you some things there that I've never shared before. So love to have you come along with us. The curriculum includes all of these different indicators, as I just mentioned. And then we're going to go through and include for you in these pricings, we're going to include the manual comes along with it for each individual indicator. So let me scroll down through this. Here's the one on the DMI, and you can see the detail that's included. We pride ourselves on our educational information at Elliott Wave Options, and this gives you an opportunity as we're going through each of the sessions. You can see the slides will be included there, and you can put notes on each individual slide. So even though you can come back and watch the videos again, this gives you a long-term record of all the things that we talk about on each and every indicator. So there's one of these manuals for every indicator that we're going to go through and talk about in the 5 weeks, the 5 Wednesdays that exist in the month of September. So again, here's the pricing. You can do it as a one-off, just buy the courses, that's fine. There's an early bird special, as you can see. You definitely want to take advantage of that. Or if you become a monthly alert subscriber, the classes are included for free. So pick your best option there, but we'd love to have you come along with this class. I promise you it's going to be a lot more in every indicator than you likely have heard before, certainly more than you can research and get for free anywhere else. And the experience, the 25 years that I've been trading comes a long way with this is when it works. This is what you want to use it for. This is how they work together. And that is the key, right? That's the whole thing, is the fact that these indicators together create a technical analysis trading system that we use to complement Elliott wave, and that's how we've achieved the results that we have. So please take a moment. You'll see that there's a link in the chat box where you can go to this information and sign up. So don't miss out on the early bird special. We'd love to have you. Another thing that I wanted to share with you real quick is we have a couple days left to try to generate up to 25,000 YouTube subscribers. So those of you that are viewing live on YouTube, go there. Look how close we are. So I scroll down, you can see we're at 24,008. Now there's a little bit of a game attached to this. So really great information talking about, will the Bitcoin rally continue? Will gold continue its collapse? What's happening with interest rates? All that stuff's covered. So there's great information in the video. But what's included in there, as you'll see if you look at the video, is that if we can get to 25,000 on this video, and we have 2 more days, I'm going to post a new video on Thursday. So we only need less than 200 people within the next 2 days. And then we're going to give away 5 of our alert subscriptions. So there's a great way to get into the indicator mastery class right there. You wouldn't even have to pay for the subscription. So it's a fantastic opportunity for you, but we have to hit that 25,000 number by late Thursday night. So if you haven't hit subscribe on our YouTube channel, please go there now and do that. And what puts you in the drawing for the 5 alert subscriptions is picking my favorite current PGA Tour player. Some of you may be aware, some of you may not. My very first career right after college was as a golf pro. And I've listed my top 3. All you have to do is get one of the 3 that enters you into the drawing. So have a little fun with it and gain some information there. So please go and do that. Again, especially for those of you that are on YouTube now. So a couple of housekeeping things that we wanted to go through before we get into the markets. So now let's take a look at the markets. You can see we had a bit of a move to the downside today, and look at that, a doji. That's interesting, isn't it? So yesterday we opened lower and then we rallied back and closed at the high. Looked like we were going to continue to the upside, didn't it? But then the retail sales number came out. That was disappointing. Consumer sentiment has been disappointing, and you're hearing all of the stuff that's been going on around COVID, et cetera. And it seemed like that was just too much. The market opened lower again. But unlike yesterday, where we opened lower and rallied throughout the day, actually started at 11 a.m. yesterday and rallied to close higher, didn't quite muster that today, still closing at a low. And what does that doji mean? Well, we want to look at our moving averages, right? So you can see that we traded below the 10-day moving average, but importantly, we did rally back enough to close above the 10-day moving average. So with that indecision that came in today, was there volume? And we take a look at it, and look at that. Yesterday, we had a bit of a breakout from these tiny bars here. You know, what's amazing to me is that the VIX is trading at an elevated level. We've been covering that in our SPY videos, right? So 16 has been kind of the floor, which is elevated from where 12 had been a year ago. So an elevated VIX with these tiny little bars there doesn't happen very often. So what does that mean? It's just one of those things that even when you've been trading for a long period of time, you see things that are a bit out of norm. So we'll comment on that kind of stuff. When you have an elevated VIX but tiny intraday bars, that's stuff building up, isn't it? That's like that lava underneath the volcano that I talk about building up, and something's getting ready to happen. But with the doji today on above average volume, yeah, tomorrow is going to be a really interesting day trading. Yesterday, we had above average volume on that reversal. So we had a reversal day with slightly above average volume. You would have thought we're going to trade higher today. Market couldn't do it, though, with that retail sales number and everything else. So what happens tomorrow? If you've been watching our videos, and if you haven't, you can go back and look at them again on YouTube. We've been talking about, I'm not going to go through and illustrate it again here, but there is a 460 target level, which is on the Elliott wave long count and the weekly chart, that if we continue, and we've already been through 4 zigzags, so we are extended in the market. There's no question about that. The fact that we've been overextended, but the market continues to go to the upside, and you trade along with what the market gives you, and the majority of our trades have been to the bullish side because of that. However, with caution, knowing that this could come to an end at any time with the extended level, but 460 may be in the cards, and then there is one more Elliott wave extension, an extension level that doesn't get hit quite often, but every now and then it does, which brings us to 482 on the SPY. But as I said, when you've gone through 4 zigzag patterns within the wave 5, and all those have reached extended levels, you're pushing it to keep looking for continued moves to the upside. But the market keeps moving up, we'll move up with it. But yesterday looked really solid with that reversal day on above average volume, but then greater volume today on a down day. So the market is in a little bit of state of where do we go? So what does that little bubbling mean, that compression that I'm talking about, with the fact that we have an elevated VIX but tiny intraday bars? I think we're going to get a big move. Could we get a blow off top to the upside? We could. Or could we get a big move lower? That's possible as well. But, we've been hearing about the COVID Delta variant for quite a while. We know what's going on there. And so far, it hasn't affected the market. The mess that's going on in Afghanistan hasn't affected the market. China came out again. That knocked the futures down to start with. So the futures were already lower before the retail sales number came out. But they came after their companies again. So the China stocks were all down once again. And that was just, it was just too much for the market to overcome today. So what we're going to do when we look for our case study, and we're going to tell you, we're going to look for a strangle today. But let's take a look at some of our, well, let me look at Bitcoin real quick, because I know you want to see that. So let's go ahead and take a look at Bitcoin. I also wanted to show you the XLF, because we had talked about, could that be the new leadership? And Bitcoin is doing exactly what you would expect it to do, following this big zigzag pattern that we had to the downside here. And we called that right on TradeFinder few months ago, before this big move down to the 161.8% level. And we've rallied up. We've gotten in the area of this 61.8% downside extension, and we're consolidating. So all that makes sense. We were overbought, as you can see from the 10-day moving average, and even with the move lower. Now, this is end of day, and I know Bitcoin trades 24 hours a day, but down here, we still haven't come back to the 10-day moving average. So we're doing normal consolidation here to figure out if we're going to break above this and go to the next extended level, which is the 38.2% level. So that was a downside extension that will act as resistance on the way back. And you can see there is some resistance along with that as far as just the regular chart. If we break above that, then we are going to retrace the entire C wave, which could very well happen. We have a nice 10-day, 30-day cross here to the upside. That's the kind of stuff we'll be talking about in the moving average class. In the indicator mastery. What does that mean when the two cross over? Is there meaning with the 30 crossing the 50? What does all that stuff mean? So we'll go into it. Why do we use exponential moving averages versus simple? What's the difference there, et cetera? So there's Bitcoin. I did want to show you the XLF, because that looked like that might be some leadership, but then we take a look here and you can see that, well, maybe not. And a perfect doji there on the XLF. So is that just a resting point? Also traded right above and closed above the 10-day moving average there. And you can see, all right, well, we're testing the breakout above those highs that occurred back in May and June. So just a test of that, pretty normal stuff. You can see this little gap looming here. We wouldn't want to give up this area here at 38 on the financials and move lower if indeed the financials are going to lead us out of this. But certainly some concern and indecision on the market as far as what the financials are going to do from here. Interest rates are at a point where it could go either direction. The Qs, this is pretty decent consolidation. They're not really leading, but that's a pretty good sideways consolidation. Again, kind of doji-ish. You can see what I mean about tomorrow being pretty significant in the markets. And if you're wondering about what the futures are doing at the moment, they had been down a bit and they've been rallying pretty much since 8 o'clock. So over the last hour, and we're about to break into the plus side on the futures. So they've recovered their downward open, but pretty clear to see the resistance level here on the Qs. And then we also talked about the IWM that's been in that big trading range. Is that going to be where we move to break out? It was certainly hopeful for moving to the upside with the financials leading. That's an important sector, but a little bit of indecision with them as far as where they're going to move. And then the IWM is it doesn't look like it's going to be the small caps, right? Doji there as well, but we're still staying in this trading range. And we broke down from what was at least a little period of higher lows, but also noted that the IWM looked like a big old arrow, right? So if we scroll this resistance line back and we scroll this support line back, just looked like a big arrow pointing to the right. Well, there's the breakout, and there's a follow through day to the downside. So it's not going to be the small caps that lead us out of this if we do continue to move up towards that 460 level in the market. So that pretty much covers the markets that I think are worth noting at this point in time. But keep a good eye on what happens with the trading day tomorrow. I wanted to show you, and I had a question that was asked, and so I'm going to cover that as well. But also wanted to show you this recent trade alert. We did this. All of this was open and closed since our last time here at TradeFinder. This is exactly what if you're interested in subscribing to take advantage of the indicator mastery class, this is what our trade list looks like. Every one of our alerts that comes out has a page like this that gives all the pertinent details of it, including the entry, what the position is, and you can see that we have a chart. What are we looking at? Why are we interested in this? And we had a breakout day here on LAC with follow through. Now, it was a little bit overbought at this point in time, but sometimes those breaks in overbought conditions can continue. So we didn't want to miss out on that, understanding that, well, if it went sideways for a bit, we'd be able to handle that. And we had a really nice support area there at 13 with where the wave 2 corrective move was. So we're in a nice Elliott wave 3. There's the 10 crossing the 30 again. Same thing, that indicator mastery. We'll go through and talk about how you can use that alone in moving averages with your own trading. And then we had our price target up here around 19. Well, sometimes things happen a bit faster than you expected. So look, one day in the trade, we generated over a 66% return. That's what you want the mark-to-market graphs to look like. It never went negative. So, didn't have much of a chance, did it? In one day, we burst back to the upside. If you take a look at the chart, man, we nailed this exit because it's pulled back since then. So we did have a bit of a doji the next day that created a follow through to the upside, but now we're a bit more overbought than we were before. And that was our exit. And you can get 66% in one day. You're going to take that. And it worked out to be a smart thing to do. Let me just show you real quick where LAC is now. And you can see what I mean as far as the fact that we timed that exit pretty well. See, look at that, straight back down. And if you look at that 10-day moving average, we've closed below it. It retraced the entire move. So that's our indicators. You want help with that? In addition to the 10-day moving average, the CCI also included in the indicator mastery class. So again, look at that link. If you're new joining us, if you're streaming it and you just happen to join in, take a look at that link that's in your comment box there while we're going through TradeFinder. All right, so another thing, I was asked a question, well, why don't you post a losing position? All right, fine. Let's take a look at a loser, because every trade's not a winner, right? Sometimes we have losing positions, and you can see the majority of this trade was underneath the zero line. So moving down, now look, at one point in time, this was nearly a full loss. It was down 95% at one point in time. And I am not one of those type of people that follow some arbitrary system. If you hit X percentage loss, exit regardless. We follow the patterns. And if the pattern is still intact, because what is Elliott wave? It follows the market in a system of impulses and corrections. Well, if you're in an impulse trade when you enter, or an impulse leg when you enter, impulse wave, if you will, you could get a correction. There's zigzags within all waves where you have impulses and corrections. So does that nullify the pattern? If it does, then you get out. If it doesn't nullify the pattern, you stay in. Even if we're getting to the point where we're starting to see, a bit more of a loss than we normally would in a position. Now, in the month of July, we opened and closed 4 trades. You just saw one of them there that we just did in August. That was one day. We had 4 trades in the 3rd week of July that were 1 day or less. 3 of them classified as 0 days. I showed you the page last week. And that meant that the trade was open and closed within a 24-hour period, which is why it shows 0. So our average time, which is a question that comes up a lot, is we look for 3 to 4 days to 3 to 4 weeks. That's the time frame that we're looking for on the average. So we had 4 of them within a week that were a day or less. Well, this one you can see was 90 days, starting to get long in the tooth. So it took a while for the expected move to come out, but it finally did. And we finally moved. Now take a look at this chart. I want to show you something else that occurs with our alert service. You can see that we had this big separation here. So we are definitely overbought, and there was the wave 5 target, and we had broken above that level. Well, note the wave 5 was still there. Well, I made a comment. I posted this, and when I do this periodically, in addition to these webinars that I do, we do one every Thursday night for our alert subscribers. That's for our alert subscribers only, in addition to this TradeFinder. I talked about how the fact that we had moved to the upside, and when you see these, it was a good example of why we trust the pattern. Yes, we had a bit of a corrective wave here, and so the move up to the target took a little longer than expected, but you're thinking 90 days, man, that's a long time in a trade. Well, is it? If you take a loss, even if you would have exited at 50%, and then you recover this to where you just have a very small loss, we recovered all the way to 13%. Now, what I said here was the fact that often when you see a pattern like this, when we hit our target, you look to see, will that wave 5 relabel? Will the wave 5 turn into a wave 3? At this point in time, it didn't. So we made the choice to go ahead and exit the position and ended up taking just a small loss, but trusting the pattern. And that's one of the things that I can share with you from experience, is what I feel like my greatest trait, if you will, not looking at patterns and charts, which I feel like I'm pretty good at that, but patience and trust. You got to trust the pattern. You have to create a technical system that you believe in and that you trust. And I do believe in our system, our combined indicators, which we're going to show you in Indicator Mastery, along with Elliott Wave. I believe in that, and I'm willing to trust it, that it's going to work and that we're going to eventually get to our target, even if it's not as fast or as quick as we would prefer. So talking about that, that was the opportunity to go ahead and close this position. Watch what happened. Remember what my comment was. Often that wave 5 will be labeled to a wave 3. It didn't, and so we went and closed the position out. Well, take a look at this. Here's where we were. This was the exit. Now watch the next day. Watch what happens the very next day. Exactly what I was commenting. I was looking for that to see, is that wave 5 going to relabel to a 3? Well, it didn't after it closed and broke out of the tap box. But the next day on the close, even though it closed lower, it relabeled to a 3. So you can look at this and say, okay, well, we were in it for a long time. We took what was a fairly decent loser and brought it back to almost break even. But had we waited just a little bit longer, watch what happens. Boom, look at that. It went all the way up. And in June, would have hit all the way to 17.5 before correcting back down. So you look back and say, oh, well, should you have waited? Did you get impatient? Were you worried about it being too long? No, it should have relabeled that day when it broke out, and it didn't. The next day, it chose to. Now, I don't understand the Elliott Wave mathematical algorithm. I've looked at it. It's 20 pages of coding. I am not a math person like that, where I understand coding like The Beautiful Mind, where they wrote all that stuff. I don't understand all that stuff, but I know what normally happens. So my point was 90 days got us almost back to break even. Had we waited 100 days, that trade would have turned into a profit. And we do that a lot. So I bring that up because the question of, oh, you were in that trade a bit longer than normal, or what would normally like to be in a trade. Well, really? I mean, do you have the patience to wait and let the pattern resolve itself to the point where you erase a loss or turn a loss into a gain? Do that a lot. So if we need to make an adjustment on the time frame, we'll do that. But I thought that was interesting, and someone had asked, during one of these trade finders, well, can you show a losing position? Well, there's one that it rallied back nicely, still took a tiny loss, but had we waited just another few days, that one would have been profitable as well. But it does show you what my comment was, in the fact that sometimes at wave 5, when you get a big impulse like that, will relabel into a wave 3. So one more day and we would have had that happen. But again, we recovered a good loss. And so you don't second guess. That'll drive you crazy in the world of trading. So you just move forward. And I thought you might find that all of that stuff interesting as far as how we do things. And we'll share all those things with you and the indicators and how they play in. All right, so now let's go through and look at some of our past case study considerations within TradeFinder in the past. This is one on Plantronics, and that was obviously a big triangle. If you've seen this one, it was a different symbol, PLT, and relabeled to poly. It changed their symbol, and we had this breakout to the downside. Then we recovered, and you can get more information on this one in the past, but we moved to the downside, and then we're back down, testing this low right here. So we'll want to see if that's going to hold that low or if we're going to break lower from here. Now watch this one. This one is ASAI, and we talked about last week, it looked like it was going to break back to the upside. Now watch what we did here. So this was the entry on June 1st. We only have a handful of these. And so then on July 27th, we said, oh, it would make sense to adjust this into one of our strangles where we buying out the money call, buying out the money put, where delta and gamma, the Greeks, are the greatest of advantage to us from the speed of which they can generate a profit. Because that consolidated into a triangle, it made sense to go ahead and put that into a strangle. Well, then as we move forward, it looked like, oh, we're bringing to the upside. But no, look what's happened since last week. Last week we were up here, and now it's broken to the downside. And that's why you switch into a strangle. What a great adjustment, right? You had an upside trade that was in an impulse, but it went into a consolidation pattern. So we said right there on the 27th, look it up in the TradeFinder, we should adjust this into a strangle. And there you go. That's why, because you got to be careful when you see a triangle that it could break out either direction. That's a trader's way of looking at these triangles, even though if you read Elliott's works within a wave 3 like this, he would have said, well, the likely break is to the upside. Well, my viewpoint is that when you have a triangle, whether it's symmetrical, ascending, or descending, cover both sides. Don't just trust that it's going to break in the direction of the previous impulse. Sometimes they go the other way. And even though it looked like it might be continuing the upward move, ended up being a big downside breakout. So we can get rid of that one. And then we did send this one out to an alert, as an alert to our subscribers on the 27th on Johnson & Johnson. There was the pattern. And then we have sent out the closing alert on Johnson & Johnson. We sent that out yesterday at the high. We could look to one more day, but again, nice gain on Johnson & Johnson. So we crossed that one off. So we're eliminating a lot of our, we're not going to have many of these left. And then last week, 2 weeks ago, on August 3rd, we looked at FND, and that one has pulled back, and you can see right here is support is created. It's wave 4. So you can look at this and say, all right, well, we can take the loss and move on this one. We've only had, to my recollection, 2 losses of our case study considerations that we've done within TradeFinder in all the months that we've been doing this. This might be the 3rd one, but we'll let it see if it can hold support here. We created this wave 4. Remember what I said, Elliott wave is impulses and corrections. So you don't necessarily want to rush to the exit. You want to see if the pattern breaks down. And having a wave 4 at a 50% correction that's sitting on top of support, that's not the time to bail, not yet. If it breaks that, different story. If it breaks that, you could look at adjusting it to a downside trade, because that means you're going to retrace that entire wave 3, and that comes down to 90. And one of the things that I talk about as far as adjustments, and one of the really cool things about Elliott wave, is you have your pattern, you have your forecasted levels. If you have a pattern that relabels and you need to change it, the subsequent pattern has a higher percentage chance of reaching its target than the original one did. Now, how many technical systems do you know of that can say that? So another reason why we like our adjustments at Elliott options. So we'll see how this one plays out. Now, the next one we looked at was Home Depot, and we already closed that one out. We sent that one out as an alert. We did not send FND, did not go out as an alert to our subscribers. And when we identify these, sometimes they go out as alerts, sometimes they don't. We have to see what happens in the next trading day and do further analysis. when they open, when they don't. So I didn't like the way FND looked the next day, so it never went out as an alert. You can subscribe and go check the trade list. You'll see it's not there. But Home Depot did. We did send this one out as an alert. And watch this. So you can see here, and look at what happened today. And look at our trade register. We closed that out yesterday and took the gain. And then that was because it was going into earnings, and we had a call spread on Home Depot, 310, 330. The entire spread was in the money. That's too much risk. Now, normally, I'm not afraid of holding a position if it's a good Elliott wave pattern moving into an earnings report. Well, you can see there isn't a 5-wave pattern labeled here. So that was a concern. We were looking at this big zigzag that was set up on Home Depot. And look what happened. It went right to that 38.2% extension, and that's acted as resistance. Now, maybe following this, maybe Home Depot catches itself here at 320 and turns around. It's got a doji there and fills that gap and marches to the upside. If it does, we'll look to get in again. But we went ahead and closed it out yesterday and took the gain. So hopefully you did that as well. If you were following along with this one. If not, see, that's the difference, right? There's a lot of alert services out there that send you out alerts for entries, and that's it. You're left on your own from that point in time. But we send you out alerts for entries, any adjustments, and exits. So we don't just leave you hanging after, well, there's several services that are out there like that do that, and they just leave you to your own devices after that. Now, if you want, a little bit more information regarding that, we send you out alerts on what we do on entries, adjustments, and exits. So that was the end of that one. So then we had CDW, and this is where we were last week. This is one we identified last week and moved nicely. Even in the face of what's happened the past couple of days, this one has continued to move to the upside. So it's up several dollars since last week. Probably not a position where you would look to take the profit yet, but it's profitable if you were following along with this one from last week. And then we also had ADP, and you can see we had a kind of a big move there. And then you look and see, oh, it's just consolidated. So we've consolidated sideways, haven't pulled back, but haven't moved forward. So that one's at break even. So CDW from last week is profitable. ADP is break even. And then I also wrote a note here. So I wanted to follow through with that we put Google on a watch list to see if it broke above 2,800. And you can see it hasn't. It's just stayed right here. So we wanted to see that one break to see if we wanted to get in. So it hasn't broken this wave 3 top here, and it hasn't gone out as an alert. So there's no entry for that yet. It hasn't hit the entry that we noted on our watch list. So no entry there, no trade, not even a trade consideration. That was the stipulation. It had to break above that wave 3 high and see if it wanted to move to the upside. Hasn't done that yet. So we only have a couple trade finders that are left from the last few months. So we've closed out an awful lot of them. If you've been following along, hopefully you've been following along with the alerts and done well throughout that process as well. All right, so for those of you on live stream, I know you come and go on YouTube. I noted that please go to our YouTube channel and click subscribe on that YouTube video, the last one that we have on the Bitcoin and will gold collapse. There's a contest there. If we can get that enough viewers over the next 2 days to get to 25,000 subscribers, we're going to give away 5 of our alert services into a drawing. And all you have to do is pick one of my top 3 favorite PGA Tour players. That puts you in the drawing. So make a note. You can see the comments, and there's some humorous ones of what people have written there on why they've picked the golfer that they have. So that's fine. Go ahead and go through and do that if you're just joining us through live stream. All right, so that gets us up to, we're going to go through and look to see if we can find a case study consideration for tonight. Now, I already prefaced this in the beginning, based on that doji that we have in the market today, we're not going to look at anything directional tonight. We've been doing a lot of directional things, as you've seen. We're going to go back and look for something that's in consolidation and take a look at this, 150. By the way, this software program is called Profit Source. a lot of people ask about it. The charts are really clean. It's, in my opinion, the best Elliott Wave software that's out there. I'm going to use whatever I think is the best. I can guarantee you that. To me, this is it. It's pure Elliott Wave, programmed directly from Elliott's mathematical algorithm, his actual algorithm. It's not anybody's interpretation of Elliott Wave, which there's a few of those programs out there as well. And if you are an Elliott Wave option alert subscriber, the company, the hub organization that creates this program, went ahead and put these in there because since I'm using it, I guess a lot of our subscribers were using it. And so we thought, oh, well, let's help everybody out from an educational standpoint and add these features. So where it says Elliott Wave options, if you're not an Elliott Wave options alert subscriber and you have private source, you don't have these. But if you are, then you get these additional ones. And these 3 searches here, the EWO ones, those are mine. Those are my indicators, which you're going to get, as I said, a deep dive into those with the indicator mastery class. And so if you're new on live stream on YouTube, take a look at that link that's in your comment box, click on that. That's an indicator mastery class that we have coming up in September, each of the Wednesdays in September, where we'll go through all the indicators that are included in these searches. So it helps you to understand them. Well, the consolidating stocks is the one that I use to find our triangles, to find the triangle patterns. So all you have to do is click in that box. Now, another thing that you can do, since there's 150 of them, we certainly don't have time to look at 150 charts. There's also a bullish wave 3 and a bearish wave 3. So let's click on the bullish wave 3 to start with. The market is still in an uptrend, even with today's trade. Now, what that does is it looks for where are the consolidating stocks that are also in an upward impulse wave 3. So it looks for both of those, and look what happened. It narrowed the list from 150 possibilities down to what, 2, 4, 6, 7. And then we can take a look at these. There's some indices. There's the Qs. Look at that. We could see that the Qs were consolidating. Now that's pretty interesting there, isn't it? Also, you can see that Charles Schwab's REIT ETF, Real Estate Investment Trust, there's some real estate companies that are looking to have interesting charts as well, as I've been going through and looking at them. There's DFS, so Discover Financial. Is that an indication that maybe the XLF is going to jump back to the upside and regain that leadership? So a few things for us to look at. Let's start off by looking at this. We already looked at the chart of the Qs, but let's bring it up again now. As you can see, the ADX is low. That's one of the things that we look at with this search. And interesting here, isn't it? This kind of looks like how the XJO used to look, and that's the Aussie index. For those of you that may be looking internationally, we had the big breakout now, downside today, but when you take a look at this, to me it looked like kissing triangles. This is the way I viewed it, where you had a small symmetrical triangle followed by a small expanding triangle. Pretty interesting. You don't see that very often, where you have 2 different triangles with their points kissing together, and then clearly you had the breakout. So regardless of what type of triangle you saw there, we definitely had an upward breakout, and we've resolved an overbought condition. But testing the high on that 10-day moving average, you want to see the Aussie get back above that, the ASX get back above that 10-day moving average there. Otherwise, we're probably retracing this breakout move, which would bring the ASX back down into this level. The Elliott Wave triangles get retraced, but just don't know when. At this point in time, though, it could also qualify as an upward zigzag, I would think. Let's look at this. Let's look here as being the breakout. Yeah. And so it is a qualified zigzag, but we'll have to see if it needs to be back above that 10-day moving average for us to look at saying, hey, we would want to trade that. You can look at the DMI, and it's resting a bit. The thing that bothers me most about this DMI is not the fact that the positive directional indicator moved lower, or even the ADX is ticked lower. It's the fact that the negative directional indicator is moving to the upside so significantly. That's a pretty vertical move. So that's telling you that we're starting to square off who's in control, the buyers versus the sellers. And so, that 10-day moving average, recovering that's going to be important. Now, sometimes those directional indicators, we'll talk about this in the DMI section on the investor mastery class or the indicator mastery class. sometimes they come together and kiss and move back apart. Doesn't always mean they're going to reverse cross. So this doesn't necessarily mean the negative is going to cross the positive. Maybe it does, but it has to actually make that cross. So they can come together and kiss and move back. So you don't jump the gun on that and think, oh, I'm going to be bearish. I'm going to go negative on the XJO. Not there yet. So don't do that at this point in time. But going back here, it looks a little similar, doesn't it? I mean, to me, it does anyway, where you can see where here's a pretty symmetrical triangle. And then kind of, it's not quite as nice as that one was on the XJL, but you have a formation there. It looks like we have a consolidating triangle kissing an expanding triangle, which means something's going to happen, right? Well, that's what consolidation means. Well, that's not the greatest of individual triangle patterns, but the fact that we have two back-to-back, so we've been consolidating roughly for 2 months in the Qs, makes that pretty interesting. I mean, that might be one that we want to take a look at, putting that on and seeing where do the Qs go from here. Now look at the Elliott wave forecast. Now these are forecasts. So for those of you that are newer and aren't familiar with maybe Elliott wave yet, or are not familiar with the looking at the profit source program, this is not saying we're in a wave 4. This is saying if the wave 4 were to label, that's a potential price target. And then the eventual wave 5 target is up here. And so if the wave 4 were to change, and these targets will move based on what the market does. But if we start and label a 4, then that won't move anymore. So they're moving targets based on what's happening before, which gives you an idea, gives you a rough idea time-wise, because that's obviously a consideration in the world of options, right? Is how long is it going to take to get there? So it gives you some forecasts there and potential price targets. But right now, could it break to the upside? Yeah. And sometimes the wave 3 goes right to that eventual wave 5 target before things correct. So you're seeing both. I've shown you plenty of impulse trades. Now you're seeing some of the consolidation trades as well. We'll show you how we use the DMI indicator in finding these too. So that looks, I don't know, that one's going to be a tough one to beat in my eyes, but let's go back and see what else we have. Let's look at DFS. If we had a pretty nice doji, and it's not really the same type of pattern, is it? Not really a consolidation pattern here. And so you might be wondering, well, why is it showing up in the consolidating search? Good question. And that's because one of the things that I look at to find consolidating stocks is a very low ADX. When you have a really low ADX, part of the DMI that we'll cover, it tells you that you're in a bit of a consolidation phase. That's important to know, because when we're putting on a strangle, when you look to buy a long call and a long put, that's double the time decay, right? So the closer you can get to the breakout when you're putting the position on, the better off you are. So the lower ADX tends to mean that you're probably closer to breaking out than not. There's plenty of triangle patterns out there that have a higher ADX, but that means there's a possibility that it could form a larger triangle. It could take a bit more time to finish creating the triangle before it breaks out. So I really like when we're doing a strangle to have a low ADX. But you can take a look here and see that there was a little triangle here. So that gives you an idea of how these triangles break. And we were just a bit overbought, and look, closed right back on the 10-day moving average here. If you put the Elliott wave pattern on, this would be one that Elliott would be saying, yeah, we're going back to the upside. But we also have to respect the possibility, right? What I was just talking about with the XJO, that if that's the end of the breakout, we're coming back down here, we're going to retrace the breakout and test that point on the triangle. Well, we wouldn't want to get involved in that. So I think the Qs looks better. Let's see if there's anything else. Smith, if I remember right, they don't have great options. I don't like to do REITs. So other than that, the real estate sector is, look at that. So Realty Trust there, Vanguard Real Estate, Schwab, REIT. So you can tell that the real estate market is in a consolidation phase. Which way is that going to break? That's going to be interesting too. Maybe we take a look at that. Look at the home builders, the XHB. It's not on the list, but might be something worth taking a look at if we're having so much stuff on real estate there. And this is something that I've commented on. We've had more backwards or expanding triangles over the past year plus that I can remember in my entire 25 years of trading. Expanding triangles occur. They're technical patterns. They're there when you learn about triangles. You learn about contracting and expanding ones. It's just the common ones. The more common ones are contracting. So when you have an expanding one, they just don't tend to show up as often. But man, there's been a lot of them over the past year or so. So there's what we have there, and we're testing this area right here at 75. You can see the support level. If it breaks that, I don't have to show you this, right? You can see it for yourself. Boom, we're going to 70 rather quickly if we break to the downside. So if 75 doesn't hold, it goes to 70. If it breaks to the upside, well, here's that clean air. I use an analogy on car racing that when you're out in front, you have clean air coming in your radiator, helps your car run cooler, helps it perform. Usually you get a little more speed. When you're back in the pack, you got everybody's exhaust, you got the little pebbles coming off of people's tires getting hot, etc. Much harder on your engine to run in the middle of the pack than it is to run out front. Same type of thing when you break above a previous resistance point and there's no other resistance in front of you, you're in clean air. There's just, where do you go from here? And that's when you look at Elliott wave and try to figure it out. And look, we're going to move to a new wave 5 target. So this will probably label into some sort of an impulse move here, because it certainly looks like we've come through and created a really nice flat right there. And this whole move here could be an impulse right there and be a complex impulse wave because of the fact that there is a triangle in it. So that looks pretty interesting as well. And that's a little bit less expensive than trading. Now let's see where the ADX is here. Now, see, there's an issue that I just talked about. So this changes the game for me personally. The fact that the ADX is at 20. So that means that, we could actually form the bottom half. Maybe it's not an expanding ascending triangle here. Maybe it becomes an expanding symmetrical triangle, and we need to spend more time forming this area here. That's what concerns me with having a higher ADX. That's why we're doing this indicator mastery class, is so you understand the ins and outs of all these different indicators. So I don't just flash them up on the screen and you're not sure what you're looking at. So it's a great thing whether you want to add these into your educational system or follow ours, or whichever you prefer. You'll have a better understanding of each of these indicators. And I got a feeling that even if you don't use them along with us, that there are things that you'll learn that you'll say, yeah, I can incorporate that in my own trading. So we're going to stay away from this one. We're not going to do this one. And I think, looking at the Qs, there's the ADX that you want way down there. And look, it's underneath even where these extreme lows have been. It broke underneath there, and now we're back testing it. So is it likely that the ADX is going to go lower from here or higher? And what does the ADX mean? The ADX confirms direction, right? So that's what the ADX designs to do. And it tells you the strength of the move. So the fact that we're at a historically low ADX reading is telling us that the consolidation is likely over here. So this is what we're going to do. This is going to be it. It's going to be our case study consideration for this week is going to be on the Qs, and it's going to be a strangle on the Qs. That's going to be our official case study consideration for this week. Pretty interesting. I think you might like that one too, because people ask about the Qs all the time. All right, so we've got a few minutes left. I'll go ahead and open that up to questions. See if you, there's not too many of them tonight. Do current Elliott Wave option subscribers get to attend the indicator mastery for free? Yes, you do. So absolutely. When is the new profit source platform coming? So for those of you that may have just joined us or didn't hear me talking about this, is platform that I use here is called Profit Source, and there is a really cool new version coming out. They're doing all kinds of testing for it. I don't know the exact date. Stay tuned. I've seen a couple of the early beta mock-ups of it. It's going to be really cool. So just stay tuned. But I'm sorry, I don't have an exact date on when it's coming, but it is. George is asking, what about a butterfly? Do you mean a butterfly on the Qs? So here, that brings up an interesting question. When I have a consolidation pattern, I don't do a single butterfly. If we were just in a wave 3, putting an out of the money butterfly up here in the wave 5, George, would be a great idea. But the fact that we're dealing with some consolidation here, you also have to respect the fact that this could also break lower, which would be no good for an out of the money call butterfly, right? Now, what I do sometimes, and this could work in from here because it's a higher dollar thing, right? The Qs are trading at 370. It's going to be an expensive strangle, no doubt. We have a high value portfolio for our subscribers, for those that are willing to. We usually keep our risk at $500 per alert or less, but we do have an option where if you wanted to put on higher cost positions, you could have access to those. But in a situation like this, another alternative is sometimes I do what I call twin butterflies. In other words, I'd put a butterfly up here, and I would put a butterfly down here. Now, when you're placing out of the money butterflies, they're really inexpensive. What's really neat about them, they're directional. You don't have to be to the point where the stock doesn't have to move within the wings of the butterfly, it just starts to move your direction. So when you do that, you know one of those butterflies is expiring worthless, right? It's going to go to zero depending on the break. But because they're so inexpensive and the potential gain is so high, that the profit that you make on the one butterfly tends to offset the risk of the other, and you still end up with a nice gain. And you were able to enter something like this at a $370 clip for a reasonable amount of risk to put on a position that could gain on either move of the market. So that would be something I would certainly look at here. But just a single butterfly, if you wanted to do that, you'd have to wait for the breakout. Now, normally, if I'm trading a downward directional pattern, it's like if this did break to the downside, we wouldn't put a put butterfly on in that situation because things tend to move so fast to the downside. And there's other positions, and the put butterfly would still work, but there's other option positions that make money faster and would be more appropriate for a directional downside trade. We will have a down market one day, and we'll be talking in reverse, and we're looking at what positions work well to the downside. Well, when you're moving to the upside, an out of the money call butterfly is a great position. But that was a good question. Glad you asked. Giovanni, can you get a sneak peek of the new product? I can't do that. Sorry. I would get shot if I did that. So can't do it. I'm sorry. Probably shouldn't even have mentioned it, but just trust me, it's really cool. It's going to be well worth the wait when it comes out. Going to have the cryptos, everything that it's just going to be so cool. So just hang in there. It's coming. Can Profit Source work on an iPad? Support, can you help me on that? I'm not an Apple guy, so I really don't know. I've never used Apple Mac products ever, so I don't know the answer to that. So maybe support can jump in on that. Vince is saying spot on for the new mastery class. It will consolidate. Yeah. So Vince is one of our alert subscribers already. He's been around for a very long time. He's in Australia for all of you Aussies. And he's the epitome of what we're trying to accomplish here, Daily Wave Options. In other words, he doesn't just sit back and collect the alerts. He's learning. He's going through the education. As I said, we pride ourselves on the education. And, Australia is on lockdown, right? And there's you can't go anywhere. And they get really mad if they find you out. So he's been using this to really, tie down and take a deep dive on all the indicators that we're looking at. So his comment was, yeah, this indicator mastery class is coming at a perfect time for him because he's been sending emails. And that's another thing that you have access to as an alert subscriber is you can send me emails direct. We have a great support staff. They can help you as well. But if there's something you want to ask me specifically, you have access to do that. And he's been sending me some questions, and I've been sending him some things that I think, take a look at this and that. So that was the comment there. So again, if you're new streaming, take a look at that link that's in your comment box on the new indicator mastery course is coming up in September. And if you're an alert subscriber, you get it for free. All right. So, man, are we going to finish 3 minutes early? Holy cow. Been working really hard to keep these to 45 minutes to an hour, and we're going to get this done in just under an hour. So pat myself on the back. I did talk rather fast, so hopefully you gained all that information. I really like this class. I hope you found this one really informative as far as the content that we went through, and that I think that example of showing that position indicated, being in a trade a little bit longer, but having patience to let the pattern do its thing. Hopefully you found that informative, and maybe that's something that you can incorporate in your trading. Really trust your pattern, your technical system. Create a system that you believe in. And the reason that I believe in this, I've been doing it for a very long time. And the other thing I wanted to share with you real quick is trading. If you want to come along with us, if you want to become a subscriber, it's afforded me a wonderful life. And that's why I like to do this at Elliott Wave Options is you have the opportunity, you have more freedom. And this example that my father was ill, and I was able to spend every single day with him in the last year of his life. And his body was failing him, but his mind stayed sharp to the very end. And we had some of our closest, most heartfelt conversations in that last year of his life. So trading can offer you a really good life. So we want you to come along, and we want to teach you how to do this. That's the gist of why we spend so much time posting educational content, not just an alert service. We want you to learn how to do it, and so that you can enhance your income or become a full-time trader, whatever you want to do, whatever your goals are. We want to help you to achieve that. That's what we're doing here at Elliott Wave Options. We are not just an alert service. We're far more than that. Thank you so much for your attention. We appreciate your time. We know everybody's time is valuable.